Oh man, so crypto is back in the red. Bitcoin down 6%, sitting at $21,000 after initially running up to close to $23,000 after the FOMC meeting yesterday. Yesterday, we had a great response to the FOMC meeting, but I said to be very, very cautious, and now we can see crypto and the markets are back in the red. What is going on? How long are we going to be in the red for? Why is the market so nervous? And when can we start to rotate back to the upside? We're going to look at a whole bunch of on-chain metrics and fundamentals to try to determine what is going on. So make sure you hit up the like button. Don't forget to subscribe. As always, this video is brought to you by BYBIT and PRIMEXBT. BYBIT offering you bonuses of up to $4,000, and PRIMEXBT offering you bonuses of up to $7,000. They're the two exchanges I use for my trading, so do get yourself set up on those. And if you do, you could be in for a chance to win random airdrops and an iPad when we reach 10,000 subscribers as a thank you. Right, so let's get straight into the charts. And as you can see, Bitcoin is down 5.6% today. We ran as high up as almost 23,000 here to the upside, and then we ran all the way as low just a couple of hours ago to 20,800 again. So we're pretty much giving up a lot of the gains from yesterday. And I tweeted out yesterday after the FOMC meeting, I said, don't get too excited with the post-FOMC green. Tomorrow, there could be a rethink after people sleep on it. And that's exactly what we're seeing. We tend to see that little rally as traders start to play the momentum. People get excited that they got the rate hike that they wanted. But now is when people start to zoom out and go, hang on a second. We're in a pretty bad situation, right? That 75 basis point hike happened because inflation looks like this, and we need to come down. And there's no, quick answer for this to come down. It's going to take a long time. And the fact that they had to tell Jerome Powell to give us the 75 basis point hike should be worrying as well. You can see fear and greed index continues to remain super suppressed. If I head on over to the pre-market, we can see that the US markets are looking like they want to give up the gains from yesterday, down 1.6% on the Dow, 1.92 on the S&P. That's almost 2%, and 2.25% down on the Nasdaq. So growth stocks are leading the way to the downside today, and it's clear that the markets are they're not ready to bounce. And I made that very clear. There's no horizon where there's nothing positive on the horizon to say we're ready to recover just yet on risk on assets, and that's the trouble right now. We know we're in this prolonged type of winter. You saw yesterday that the Fed revised their GDP forecast to the downside. They revised their core inflation figures to the upside and unemployment to the upside. So these were all bad revisions, and the market needs to take that on board. Yes, they got slightly excited yesterday because they got the 75 basis point hike, but again, how can that be a good thing? It's reducing the flow of capital. It makes it harder for growth stocks, and we know Bitcoin is correlated to those growth stocks. Now, we're going to back this up a little bit with some on-chain metrics. So let's dive into a few different on-chain metrics which I want to share with you guys. The first being the common one which we look at, which is realized price. Now, just as a reminder, realized price is the average price of every coin in supply. So it values the coin the last time it was spent on chain. And when you take that aggregation, you get a realized price, which is almost like a cost basis for the wider market. And currently, that is sitting at 23,340. In other words, we are now below our realized price. And if you look towards history as an indicator, because history doesn't repeat, but it most certainly does rhyme, we see that the last times we came close and in fact below our realized price was in the 2018-29 bear market and March 2020. And the other thing you'll notice is it doesn't necessarily happen quickly. I mean, if you look at the 2018-2019 bear market, that was quite a long period of time you were down here in this level. So this kind of unrealized loss where people are sitting in a loss for quite a while can happen for a while before the next bull run to the upside. The March 2020 situation was a little bit quicker. We dipped below and then we ran back up, partly because we were in an accommodative situation. The Fed responded by printing huge amounts of money, driving us away from a potential recession. The opposite is true of today. We're in a Fed-induced likelihood of recession, right? And many economists are now expecting us to officially enter a shallow recession by Q3. I think we pretty much are in a recession anyway, and I'm expecting and preparing for a sustained down period to accumulate. So that's the first thing we wanted to point out. Now, keeping things moving, you can also then take a look at the market value versus the realized value. So the realized value is what I just showed you. And if you take the ratio of that with the market value, which is the current value the market's moving at, you get this oscillator, you get this metric to look at. And the key thing to notice with this metric is the following. Let me just move myself. I'll go up there. And what you'll see is where my cursor is just now, you will see that Bitcoin is starting, the MVRV is starting to head into negative territory. If it crosses this line, we'll head into negative territory. And the significance of that is when you enter negative territory, the last time again that happened was 2018-2019 bear market and the COVID crash. And again, the 2018-2019 bear market, we were negative for a very long period of time, okay? So just further backing up the point that you could be in this situation where many people have an unrealized loss for a long period of time, like 12 to 18 months even. And that is what I'm preparing for on this side. If we also flick on to then take a look at something called accumulation. So we can see that people are accumulating. Now, the darker the dot here, the more accumulation is going on. And you can see we switch between accumulation periods and distribution periods. So here, this was accumulation, distribution, accumulation, distribution. Now, we covered off in previous videos, there are two types of accumulation. You get accumulation where new wallets are accumulating, where people new to the markets are accumulating during a bull market. And then you get people who are accumulating on the way down when you're getting close to a bottom out. So those are the different examples. So you can see how people are accumulating here, and then you're getting these types of people accumulating on the downside, waiting for that bottom to come back up. So these are kind of the more stronger hands, more experienced investors. You can see we've come off a period of kind of a hybrid of accumulation and distribution, a bit of both during this period so far in the first half of this year. And now it looks like we're going to enter a period of accumulation where the strong hands really do decide to accumulate. And we're going to take a look at what type of wallets are actually accumulating in the market. This Bitcoin liveliness also backs up the same thing. And what it shows you is similar to the previous diagram, that we are now in a downtrend hodling regime. Okay, so before you're having a distribution regime, you had a bit of equilibrium across. Now you're heading into a hodling regime where people are going to need to hodl through unrealized losses. Now, the other important metric to look at is we are indeed seeing a slight drop off in hodler inflows. Okay, so what I want you to look at is look at the green here. Now, in the previous few months, if you go back to before May, before the lunar crash, you were getting decent amounts of inflows coming into hodlers. But that value is still an inflow. We're still getting accumulation of Bitcoin, but as a positive net position change, it's still green. But you can see how significantly less the amplitude is now. Before we were getting close to 50k Bitcoin accumulated a month by hodlers. Now you're barely just under 25k, and you know you can see where the level is versus 25k here. So yes, there are still hodler inflows, but you are seeing that softening now as you really start to head towards some sort of capitulation now. Let's also take a look at this, which is your accumulation heat map. And what you'll notice is something very, very interesting. You'll notice a few things going on. So remember, the darker the color, the more you're accumulating. Okay, the darker the purple. If you're darker red, that means you are not accumulating. Okay, that's important. That is distribution. You're giving away your Bitcoin. So the important thing to note here was earlier in the year, you could see the whale wallets above 10k were doing some distribution. This is zone A. You could see they were distributing. They were not accumulating. Now you can see how their behavior has gone. They started picking up their accumulation, and now we're getting the dark purple starting to come in, suggesting that wallets with over 10k of Bitcoin in their wallet are accumulating very strongly. There's a clear intent to accumulate, which indicates that they must suspect we're heading towards some sort of a bottom. You will then notice another section which is super dark purple. And these have been purple for quite a while now, and these are the small shrimp wallets, what we call shrimp wallets, people with less than 1 Bitcoin. They've been accumulating for quite a while now, and you can see they're accumulating with big intent, and this makes complete sense, right? The small wallets want to continue to accumulate. They're coming in new into the market, and they're seeing interesting prices on Bitcoin at 20,000, 25, 26,000, and they go ahead and accumulate. They got nothing to lose, right? The whales are more experienced. They would have just gone off a period of distribution, and now they're buying in at lower prices heavily, as you'd expect. The middle wallets are where you're seeing the most kind of suppressed activity. So either they're just kind of, some of them are hodling and some of them are distributing. And it makes complete sense because these middle wallets are where you get capitulation. These people are the people that have come across some significant wealth in crypto. They've got decent wallet sizes up to 10,000 Bitcoin, but they're not necessarily huge whales with sophisticated research teams and they can time the bottom and have all that experience. So they're the most prone to capitulating when the price gets tough. They've got enough Bitcoin that when you fall into a realized loss, like I was showing you in the previous metrics, right, when you start to get below the realized price, those are the people that are feeling it. Okay, so those are the ones that are feeling it. Okay, now the other thing worth noting is let's then zoom into these cohorts, right? Let's take a look at these specific cohorts, and we can look at the ones with less than 1 Bitcoin. So this is the cohort of less than 1 Bitcoin, and as you can see, their supply held is indeed still picking up. You can see here that on average a month here, they're picking up over 20k Bitcoins per month in that cohort. So they are picking up, and they're picking up at a similar rate to what they were doing before the lunar crash. So we've not seen a change too much in that position. Where we are seeing is these shrimps, again, which are all these wallets here from less than 0.001 all the way up to 1 Bitcoin. These are all the different color codes here. All of them are going slightly up and to the right. They're all accumulating and heading in the right direction. So they've not changed their trend massively on the smaller wallets. And similarly for the larger wallets, right? The whales are still accumulating as well. They're accumulating between 100 to 150k regions, still nice and high spikes here. But are we getting this tailing off, right? You can just see here these last few readings here. Is it starting to soften? Is that demand starting to now start to come back into lower ranges? But one thing was clear. Whilst Bitcoin was between 25k and 32k, these people with 10k or more Bitcoin were buying more Bitcoin. That evidence is clear. While we're in that range, they were accumulating. Now, the next thing, which is really important, we've looked at this before here on this channel, is the dormancy flow. Remember, the dormancy flow, a low value means that there is some hodling, okay? So this is really important. So what we can see is every time we've dipped down to these levels in the green band here, this has indicated a huge crash, as in a huge low, after which we then started to rally, okay? So we can see that playing across 2012, 2015, 2019, 2020 COVID crash. Then we had the summer of 2021 when we ran down to 29,000, and now this period here. But look how deep this one here is here. This is very different to these kind of, blow-off bottoms where you kind of touch and spike and off you go. Touch and spike, off you go. Touch and spike, off you go, off you go, off you go. This one is feeling a little bit more, and this is testament to Bitcoin really facing its first major global financial crisis. So I wouldn't be surprised if these bottoms are deeper and more painful than previous bottoms we've seen on crypto. So that's something I'm preparing for. I'm waiting to see, do we get this bottom? Is this something where, crypto is finally starting to bottom out? There's no evidence of that yet. I mean, from the technicals, you can say, okay, fine, we're going and we're testing our previous bull run highs. That is an unprecedented situation. But if we lose that level, if we lose our previous bull run high, then things could get much worse from here. And that is the thing we need to be prepared for. I don't want people to get too excited that, hang on a second, we're just going to run to the moon now. There could be 20, 30% more downside from here. There's no reason why not. The macro economy doesn't suggest that it's getting better. Inflation hasn't shown any signs of getting better. Therefore, we have at least months and months of more increases in interest rates, at least 75 basis points, 50 basis points. These hikes are going to come month over month at each meeting, right? So if and until we see inflation really start to come down from 8.6, then we can start thinking about the recovery story. But right now, there is no recovery story from here. The only way I can think of a way that we get some sort of recovery before the wider economy kind of recovers itself is if Bitcoin starts to take on this narrative of being a true anti-inflation hedge. Because right now, just being treated as a risk on asset, and therefore we're not able to move because risk on is not on, and risk is not going to come on for a long time. We're getting major stocks and shares really falling to the downside, including tech getting hugely smashed to the downside right now. It's a crazy period of time in the markets, and therefore Bitcoin is getting its fair share too. As always, guys, you've got to build your conviction. You need to make sure you stay having high conviction in your favorite plays, and the key thing for me is make sure you are nibbling. Yes, I've shared that we may head lower to the downside. We may bounce. The reality is nobody knows that clear outcome right now. But what we can do is we can make a judgment call based on the prices we see. And I can only speak for myself in that when I see Bitcoin at 21,000, when I see Ethereum super close to $1,000, I can't help but to nibble and to buy more. I can be smart in my behavior in that I make sure I don't go all in. I don't spend all of my dry powder, but I am accumulating and I am buying decent chunks of these cryptos at this point. Hope you guys are staying safe. safe out there. Continue to build your conviction. Make sure you're not in any plays which, if they fell another 30%, you're going to panic sell. I've been saying this for many months now. You've had many opportunities to offload them. I would not be in any of those risky plays right now, particularly if you're misallocated in them. That is a recipe for disaster, because a lot of projects are really going to get tested. We're seeing already major players, major hedge funds, free arrow capitals, Celsius. We've spoken about this. We saw what happened with Terra Luna get tested through this bear market. And this could get even worse. Imagine if Bitcoin falls to 17, 16, 15. We need to be prepared. We need to make sure we're not in those lower market cap projects where if they do fall, they start to run into hard times and really do struggle. Hope you guys enjoyed this video. As always, don't forget to smash up the like button and subscribe. Do get yourself set up on BYBIT and PRIMEXBT. Collect your bonuses in the description. Up to $11,000 combined of bonuses available for you to grab and start trading with. So why not grab them? When you deposit in BYBIT, even if it's just $1, you're automatically going to be entered into the chance of winning an iPad when we reach 10,000 subs. I'm going to link up a playlist here where you can watch a whole bunch of evergreen videos with some true alpha in there. So spend some time, go through those. I've got a lot of great content in there for you guys to watch. And I'll see you in the next one.